Next question: the gold and bond market are saying the Fed will raise rates in December. Why do you think equities are continuing higher? And I don't necessarily think the gold market is saying that. I think that the positioning in the gold market was so moved from being very bearish in August to set up for a more dovish Fed last week, and I think that's more of like an unwinding of that position than the gold market saying that the Fed's going to raise rates.
We've seen this 8 times, okay? 8 times this year we've seen this, where somebody would send us an email saying, oh, bond yields are breaking out to the upside, they're breaking in that the Fed's going to go. 8 times. The 2-year has gotten to like 0.75 to 0.76. One day it got to like 0.81. If you think, after all of this, that we're going to accept that as being true, or that you got sucked in every single time if you did that. Your year is so bad at this point that you could only hope that eventually you get a base hit when it's 10-0 in the bottom of the 9th. I mean, that's not going to change the fact that bond yields. What did they do? They went to the low end of the range again, and then they bounced again, and they made a lower high again. And when they make a lower high again, then you get another economic data point, and then we'll say, like Herb Brooks said in Miracle, again.
Yeah.
How many times do you have to sit here and fight what has been the best call for the last year and a half, low volatility, big asset allocation call, which is to bet on slower for longer and no Fed rate hike? If the Fed does make a rate hike during slower for longer, you're going to be more right in the end anyway, because they're going to blow up the whole damn thing.